Hey guys, alrighty. So we are officially off to our start here in 2024. Um, and Bears strike first. So basically, if you missed it overnight, what happened was, or best that I can tell, was on the 1 month Treasury yields, there was basically a random massive spike overnight. I don't know exactly what time it happened. I think it was sometime like midnight-ish. But essentially, what happened, we had that huge spike. I did some research and I was reading as much as I could about it this morning when I woke up. Everything says that the last time that happened was during the bank run that we had in March of 2023. So what that basically caused to happen was the rest of the yields, so the 10-year especially, and the dollar to all spike. And when obviously those things spike, we get some major downside. So if you remember on Friday, I talked about here, this is the 10-year weekly chart. I talked about this doji, and we did end up closing out a new demand down here. I talked about this doji chart right here. So we had this weekly doji rejection here that led to this bounce right here. So you see we did wick through our bear channel, and this is the bear channel that basically goes perfectly with the bull channel that SPY and NQ and all them broke today. So we did get a hard rejection. You see we did end up actually hitting 4.024%, so back in that fours. My thoughts here are we are going to get a move back up into this 4.235 area here. There are a couple old demands here. I'm not sure why they're not on this chart here, but that demand is actually up here at 4.172, and there's another one at 42.25, so 4.225 right about there. So I'm looking for a move back up on the yields to this area here, and when that happens, I think that is going to bring the correction down to the downside. Same thing, I got to update this year. The dollar did get a new weekly demand. So again, this is weekly time frame. We are still in our bear channel here in the dollar though. So again, this goes back to October. So you see we were flat and then boom, same week we started our rally, same week the dollar started its drop. So with this breakout, I'm looking for that 403.164 to really 404.104.02 area. So this is likely where we're headed. If the dollar heads there, and yields head there, then likely we are going to see this bigger drop here on markets. So if we go over to SPY here, we essentially put that supply in last week at 476.94. We are coming down and we are now testing our double demand. So remember back here, this is what we've held realistically our range since we got into it on December 13th, but we established the bottom on December 15th and now the top on December 28th. So really for about 2 weeks, we've been in the same range here. We did put our first full candle under the daily 8 EMA support. We have not done that since all the way back here at basically the start of the rally on October 31st. So what I'm looking for with this doji here, realistically, we could go either way. We could see continuation to the downside, or we could get a hard bounce back up. I am looking overall for a bigger sell-off to this orange line. That's the daily 50 EMA support, which by the time we get to it, likely will be this 459.16 to 461.54 area. Now, in the off chance that we hold this double demand and get a new demand, I would still hesitate to be long until we can close over 478.15. Looking at futures here, so we did break our bull channel. Remember, that's the bull channel that we've been in for this whole rally. We're going to close under the daily 8 EMA support. So again, same thing here. I'm looking for our support of this range that we've been in since the 13th, which is 47.50. If we close under 47.50, which the daily 20 EMA support should be pretty close to there too, then I'm looking for that 50 EMA. I think we could come down to this kind of triple supply area here from 4,600 to about 4,622 area. That's my bigger target, but again, we're going to need to see yield and the dollar continue to rise. Now, of all the charts, now the Qs broke its bull channel last week. Of all the charts, the Qs is actually the most bearish of all four. And the reason being is that we actually saw daily sellers come in for the first time since October. So for the first time in 2 months, we actually have daily sellers on the books right now, which means that this drop is it's supported, it's justified. There are people selling into this. This isn't just a correction where money isn't really leaving, it's leaving. So again, we did close below our double demand support at 403.24, but with that little 15-minute rally at the end of the day there, like we like to do on us, we did hold the daily 20 EMA support. Realistically, I need to see that closure under the 20 EMA, and then same thing, daily 50 EMA target of 390.06 to 390.81. I realistically think this is where we're headed. I do foresee a time, or an area rather, where SPY could just kind of more consolidate or more slowly go to the downside, but I think the Qs are going to have a bigger sell-off here. I mean, you can't have Apple have a negative 3.6% day, Meta, Nvidia have negative 2%, almost 3% Nvidia, and AMD down 6%, and not have this be kind of a sustained drop here. This was a market-wide sell-off for tech. Big rotation out of tech. Everybody kind of rotated into healthcare and utilities today. So basically, that's where I'm targeting here. Going over to NQ, same thing. We broke our bull channel support today. And same thing, we closed below our double demand right here at 16,737 and 16,788. So same thing, we didn't quite get under the 20 EMA, mostly because of the last 15-minute rally. But my target here is the 50 EMA. I do think we at least take out this triple supply at 16,498 to 16,592. And we could come down to the 16,032 to 16,091 area. But most likely, we're going to stop somewhere right around this 16,195 area. Now, the VIX is the one thing that really doesn't make a lot of sense to me. So I've been saying this for months now, but I like to watch it because I think it can be helpful. So at open today, when the VIX had, it was like 15%, I think it was, or something like that at open. Let me see here. It was pretty close to 15% at open. 13%. But either way, when we had that rally and the yields were up and dollar was up, I was finally thinking, oh wow, the VIX actually makes sense. It's actually following the markets here. However, as you can see here, massive sell-off on the VIX today. So this is actually the second day, if you look at the Friday's candle on the VIX, where we had a red market and we technically had a red close on the VIX. Now, again, the VIX closed up today, but the candle is red because it closed below its opening price. So this is where, in my opinion, big money has not bought in or do not believe this sell-off yet. This is a reaction to the treasuries. This is a reaction to the dollar, and that is fueling this sell-off right now. Until we realistically see the VIX break out over 14.34, I think that the VIX is not really going to be very helpful. Most of the day today, when we had the drop, you have the VIX kind of falling with it. So, it'll be interesting to kind of see if the VIX can actually make some sense before the end of the month here. But overall, I'm going to put more weight in the 10-year and the dollar. If we have some bigger green days on those, that likely signifies that we are going to see some continuation to the downside. But otherwise, the VIX is just stuck for, the last essentially month and a half now. The VIX has been pinned in about a $2 range. So again, I'm not one to say manipulation, blah, 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 but it does seem very intentional that we are seeing the markets kind of pin the VIX here. So, seeing the market sell off short term, basically for 3 days now, but the VIX is not rallying with that is interesting. So either this truly is just a short-term sell-off and, markets are going to recover very quickly here and we're going to see those new all-time highs in 2024, or big money hasn't started piling in to the downside shorts yet long-term, and this sell-off could pick up steam. So this will be interesting to kind of see how this plays out for this week here. We are finishing up tomorrow the Santa rally. It's not really been much of a rally as of right now. So it's the 26th. So yeah, December 26th through tomorrow. So if we take the close from, we closed at, let's see, 473.65. So right now at close, we're down about 0.19%. At peak, we were up about, let's It's at 0.8%, and at the low here, we were down about 0.64%. So overall, a bit of a bust on the Santa rally. So we'll see what tomorrow brings. If bulls can rally us just a little bit, likely then we'll get that green Santa rally. Tomorrow is JOLTS data at 10 a.m. That is the first of 3 days in a row of some very heavy hitting economic data. We got JOLTS, ADP farm, and unemployment rate on Friday. I am watching those closely. With this already market weakness and basically a market that's priced in stuff perfectly, if we get some sort of negative reaction or negative print that the market does not like, that could again fuel this downside move here. So tomorrow will be very interesting to see what the bulls or bears do. Bears desperately need that follow through and closure lower. Bulls have an opportunity still to bounce this, but it is looking like the correction is finally going to come.